The 2008 global financial crisis. On September 15, 2008, the unthinkable happened. Lehman Brothers, one of the largest investment banks in the world, declared bankruptcy. This collapse sent shockwaves through the global economy, triggering a financial crisis unlike any seen in modern history. The world watched as financial institutions crumbled, stock markets tumbled, and the fragile web of global finance threatened to unravel. The roots of the crisis were buried deep in the housing market, where risky mortgage lending had spiraled out of control. Banks, in their race for profit, had handed out loans to borrowers who couldn't afford them. These subprime mortgages were bundled into securities and sold around the world, creating a ticking time bomb. When home prices began to fall, these investments quickly became worthless, causing massive losses for banks and investors alike. Lehman Brothers' fall was the most dramatic, but it wasn't the only casualty. Other banks, too big to fail, teetered on the brink. The government intervened, bailing out some institutions while letting others collapse. But no one was immune. The global economy slid into recession, and millions lost their jobs, homes, and savings. People everywhere felt the weight of the crisis, from Wall Street to Main Street. As the crisis deepened, it became clear that the economic system, built on trust, was in peril. The world had to confront uncomfortable truths about greed, risk, and regulation. It wasn't just the financial sector that had to change. The entire global system had to be re-examined. In the years that followed, new regulations were put in place to prevent such a collapse from happening again. But the scars of the 2008 crisis still linger. The 2008 global financial crisis was a defining moment in history, one that changed the way we view money, risk, and responsibility. It was a wake-up call, reminding us that the economy, like any system, is only as strong as the trust and integrity that sustain it. To help the channel grow, remember to like, share, and subscribe.